Business leaders we spoke to cheered the revised growth forecast. Some were surprised that a 2% growth had been registered in the first half of the year, given the weak nature of external economies. But they also said the positive news does not mean companies should rest on their laurels.
Singapore's tourism and services sectors may have helped the economy grow by 2% in the first half of 2013. That's the sense of many business leaders upon receiving news that the country's economy is doing better than expected. But the sense of optimism is not shared by all.
From what our dialogue session with many trade association leaders, their feedback is not very optimistic because of this labor shortage, because of the rental and drive the business cost.
While business leaders share a more positive growth forecast for Singapore, they say there are certain companies that need help, especially the smaller ones. And while government help is there for small and medium enterprises, some businesses say more can be done to keep firms informed of such help. But at the same time, they say the onus is on them to be creative and raise productivity, even if times are tough for the smaller players.
Regular dialogue is important for the government to understand their plight and at the same time for them to adhere to the government's call for improvement and also innovation.
Some experts say the relatively poor growth in the manufacturing sector did not dent Singapore's potential for doing well too much thus far.
The bottom line here is we had a slow start to the economy. The economy picked up pace in the second quarter itself on manufacturing recovery, and that perhaps could be sustained into the second half.
And observers note that if the momentum for growth can carry on, Singapore can look forward to a better than expected year in 2014.